The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, the 16th day of December. My pleasure to be here Monday through Friday on market days. And we've just had 3 great hours with John Logan, Steve Rhodes, and hopefully I will add to that. And we got programming right through the day until 6 this evening, ending with Andy Hecht. So we've just got a full program. Now, what's really important is that the futures this morning, early this morning, when I woke up, I saw the futures up sharply. And I thought, I wonder how long that's going to last, because every day for the last 6 days or 7 days, you've had about 200-point swings up and down, or just crazy action, mostly to the downside in the end, making lower lows. You can see that right here on the chart that I'm showing, Tiger TV. And most importantly about this phenomenon is that we keep having, remember I made a big deal about just 2 things, the high VIX and a story that is treated negatively. Sometimes it's a positive story, but the market treats it negatively. You've got to have bad news, or you've got to have perceived bad news with an accelerating volatility index to be able to sustain a move to the downside that has both durability and it has a focus. A media focus, that is. And of course, the media invariably gets things wrong. That's their job. Their job is to entertain you. Their job is to allure you, to get you in. Doesn't matter how. Doesn't matter about the facts. Matters about the headline. So I'm sure the cameras were all there for the big story for tomorrow about the ruble. And maybe there won't be much of a story by the end of the day. We'll have to see what happens. Most importantly, what we're looking at is that the S&P futures were up very sharply early this morning. Then they were down very, very sharply on the Dow. I just watched them going. The futures were up about 9 points. And then, they went down in 5-point increments until they hit minus 20 area. And then at 1961.50, the E-minis, the March E-minis turned around. And where are we now? We're at 1990. And that's, and it's not even 2 hours. This is an hour and a half into the session. So let's get to the story. The story is I'm watching very closely the weekly charts. Why? Because in October of 2007, you had that spiral to the upside, which I was terming a potential right arm extension in the Chapman wave, going to new all-time highs. And it depended on the slow stochastic, whether it went back under 80%, to tell me whether or not that was just a single move to the upside, even though it's very often made up of 2 peaks. The first peak is usually E/, continuing the old move, E/A, and then it goes F/B. And what happens in a case like that is that if there's a certain point of decline, the die is cast, and that's just a single move up, and you will be coming all the way back. In this case, you'd be going back to the October 15th lows. So a lot depends on what happens this coming week. Based on all the chart patterns of all the indices that I've seen, it's fascinating that gold did nothing. It actually had a horrible day yesterday, had a horrible early morning, and then out of the blue it started to rise. The GLD was up about 2.5 points, and now the GLD, the gold index, is up only 45 cents at 114.86. And we'll see that as we move along. So now let me do this. We'll go quickly. Look, here's the E-mini. Nice candle forming, little V-shaped bottom in the unbalanced volume. Stochastic just crossed positive. NACD still awful. Weekly chart, just about to cross negative in the MACD. Hasn't yet. We have to wait till Friday at 4 o'clock. Huge volume. Stochastic still at 88%. Good. Here's the 120-minute chart. 120-minute chart shows I show my subscribers every day. I show them trend lines of importance or areas of resistance or the Chapman wave methodology at work live. Because I want them to know exactly what we're looking at, mostly 24 hours a day or close to that in the futures contract, but I don't give any buys or sells. I just show the parameters. And this says there's a good chance that we could test the dash downtrend line of 1999 to 2003, that area right there. And the most important thing would be a close above 2012.25. Now, it's possible over 2 or 3 days that we have that kind of a bounce. Now, let me just move this away, and let's just get into the other nitty-gritties. What we're looking at in the Dow, INDU, is the Dow went to a lower low today. It went down to 17,081. I have to tell you, a close in the 16,900s would be a very negative psychological thing. Remember, I made a big deal for quite a while here about the 18,000 millennium level. To my eye and my training and my discipline, that 18,000, I said, should be. You might close a little bit above it maybe once, but that'll be about it. But that 17,990s area, I said, will be very strong resistance. What was the high in the Dow? 17,991. And now we've come all the way down to today's low of 17,081. So we've gone almost 1,000 points to the downside, straight line move. We haven't even had a leg to the upside that we can call A, leg A. I suspect that'll come tomorrow. I don't think it'll be today. The Dow would have to go above 17,403.54. I just don't think that's possible today. So we'll see what happens. Now, we are oversold, and the most important thing that I'm going to mention right now is the VIX index. The volatility index, single leg A up phenomenon in the daily. We went all the way to today's high of 25.20. That is a whopper of a move. Talking about a whopper of a move. That reminds me to look down at my notes. I always forget to actually look at all the notes that I make. So we've gone from 11.53 to over 50, to over 100%. It's about 110, 112% to 25.20. It deserves a break. I suspect that we'll be pulling back towards the 19, towards the 18 area, 19 to 1750 maybe in the VIX. If we don't even get there, that'll be quite a show of strength. But when my analysis says that fund managers wanted to hold their positions, they had great gains, they didn't want to mess around in case the market went back up. So they wanted to buy protection, so they bought some, not all, but some protection from the VIX index. Whatever VXX or whatever the way you can play the VIX index, they've chosen to do that. We did before. We had some nice gains. Would have had spectacular gains because the instrument we had was just off the bottom at about 211, and today that particular instrument went all the way to, I think it was yesterday, it hit 3.41. Today's intraday high was much higher pre-market, but now it's at 3.05. So that's still a fantastic gain. All right, so it's ready for a pullback here in the VIX, and that's going to be important. Most significant here, the SPX.X. This is really, I could move it to an alternate count here, but meantime, I'm calling it A. I'm showing you all those weekly trend lines. It held the trend line. This is a very good time for it in the 120-minute chart to go from the cash 1999 down up 9.59 to try to test 216. But first you've got to break 2003, the 9-period moving average in the 120-minute chart, and then we'll see whether it's able to get, that was a peak F, I never finished that. This is an A, B, C, D, E, perfect E, remember that? I don't know why I've lost those charts, but I had them before. So that's the S&P. Parameters to watch are any pullback by later today. I don't think it's going to happen. I think we're moving higher. I think crude oil might even rally. We're watching bonds real closely. We'll get there in a moment. Look at this. Nice move up, and I suspect that this is going to be the kind of move that is based, it wanted to do it earlier, and then it was aborted because of that bad news in Russia. I suspect there's some going on tonight our time tonight in Russia, and they'll do something to ameliorate some of the problems short term, but it'll only be short term until the next problem. So the parameters to watch, 1992 to 1988. Don't break that on the S&P because that'll be very negative. Most importantly, you've got resistance up in the 2019 area. This is an important week in many ways. The QQQ series, nice turnaround, but not great. It's acting very poorly because of some of the big cap NASDAQ stocks that have just been horrible. I'm watching this as a peak D/A in the weekly chart. It was under the 9 EMA of 102.21, but the Power Shares QQQ Trust Series ETF, the monthly chart is going to be absolutely, December is just going to be critical for that particular vehicle. Now let's go to the IWM. IWM it just came right off the 200-period exponential moving average. You can expect a bounce in the Russell 2000 iShare ETF, trading at 114.60, having made a low today of 113.03. I think it's going to travel higher, and it should have a lot of resistance in the 115 to 115.50 to 115.81 area. The whole 115 is very strong resistance. Now we're going to get to the gold. GCG 15, look at this. I've got a peak E in the daily, and I've got a B in the probably a peak B. We don't know if it doesn't break. The contract doesn't break 1239 this week. We've got a peak B in the weekly. But look at this. This is really what you want to be looking at. The long term has a doji candle from last month. And it's really important that if gold is going to go higher, it's got to close above 1208.30. This is a continuous contract. That was the high of last month. If it does that, it can hit the 1232 9-period exponential moving average in the monthly chart. But if it closes underneath 1131.10, the low of last month, under that doji candle, that'll suggest that the next move on the downside in gold is 1,087.50, the February 2010 low. Let's look at silver. I was asked about silver. Silver's broken under the 200-period moving average. It's trying to test the 17.83 9-period exponential moving average in the monthly chart. The weekly chart looked like you could have a bounce, and I thought I'd done this. Maybe I did it on the SLV. I was going to draw in the arch formation that turns out lowercase h that can turn out to be an M pattern. As silver, I must tell you, this daily chart suggests that peak F right there, and then this could turn out to be an alternate count, unbelievable, alternate count G/B if it fails. So this is a peak F. And this looks right now like it's just an extension of the on-balance volume. It looks like it's closer to a G. Wow. I'll be talking about that when we get back. Dow's up 130, he's up 13.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's up 142, S&P's up 15.60. A huge move. Huge move like it was to the downside, now it's to the upside. So, and a well-deserved move at this particular point. So I had a question here about Microsoft. Yeah, it would be very unusual for Microsoft to have a peak C minus, but it has at an all-time high. But it had that C minus. There's no other way I can count it. But there's a chance that if there's a rally that starts in Microsoft over the next 2 weeks, a serious rally, that it makes another a peak A, B, and then a C, and then an overlapping wave that goes to a D. Now, talk about overlapping wave. There, first of all, it's a peak F/C in the weekly chart. So F will trump anything in the daily, a weekly, because the tide is much stronger. So we've got to watch this, and I've got a potential F in the monthly. So Microsoft, a lot of these stocks, this is a very, very important moment. I wanted to just show something about the TLT. We've been waiting patiently for leg D at 127.69 to occur. We've got leg D in the 120-minute chart, right there. We've got a new leg D in the daily, but really what I want you to see was an overlapping wave. You might still see it. An overlapping wave with the move on the 15th of October. I mean, that's when the market reversed. That's where bonds reversed at 127.68 in the Lehman iShare 20-year T-bond Treasury bond fund. And that would also become and I'm sure it's going to happen at some point, leg D up in the daily at 127.68. And would be in the weekly. That would also become leg D up in the monthly at 127.69. So at 127.69, you get a whole plethora of Ds, and it was way over that in the early morning. But I'm going by print. Well, this might be one of those times it just misses because it was such a crucial moment. I don't know what's going to trigger the next move up in bonds, especially if the market has a 2 to 3 day counter trend rally, which is quite possible. So for my subscribers, we're trying to take a couple more short positions on this bounce that we've been expecting. At the same time, we also have a long position. The long position's, well, days young. It's doing great, but who knows? I mean, doing really great. That is not a long short position. It's just purely a stock on the long side. And one that we've had many times before. Now, here's the thing, that the dollar, look at this, DXY is holding quite nicely. It's down 44 cents at 88.02. The whole candle right here is beginning to look like it could become a Roman candle. If that's the case, it means that at any point a break of the index below 87.80 would start to test 87.63, the low of the day. Might not even be the low of the day. We could still go low. Who knows? I'm a little behind in the dollar. What is the dollar? Down 30. So yeah, this is fine. So, and peak D in the weekly, very strong leg G/A in the monthly. So the dollar, I've been talking about this for a while. The dollar is due a rest. I mean, it deserves it. Look, there's the dollar. It's broken under the 200 period moving average. It's got that H pattern. It's got actually an inverted head and shoulder that broke down, and as well as a regular head and shoulder that broke down. So this pattern is saying, I'm consolidating. I haven't broken down yet. Just I need a little time out. And EUR/USD, this is the Euro Japanese yen, peak D in the daily, 120-minute chart, leg B in the daily, and the monthly is just trying to come off. This is a leg A, first kind of bounce that we've had. I've been discussing this before based on the MACD and slow stochastic, little positive divergence in the weekly chart. And also in the monthly chart, you got this massive long-term from 2010, 1.187 to 1.2045, the low of July of 2012, slightly higher low, and then a slightly higher low that's trying to be established here at 1.22 in the euro-dollar currency pair. But I suspect that this H pattern is going to fail at some point. However, look at this. USD JPY, which has been mirroring the dollar index, went to that exact left side, right side price time match right there. No, it's not an exact. It is 2 months early, 3 months early. So it went to this level. To go all the way to 124.13, you can extend out and say that we could go into February. But in the meantime, this is leg D. It says the monthly chart has had a spectacular cup formation, and the weekly chart has made a peak E if it's no new high this week, which doesn't look like it is, but the MACD and the technicals are still very strong, mirrors the dollar very well, and I can't remember what, I'm forgetting crude oil, I'll talk about that. I'll be right back. Up 220 in the Dow, up 23 in the S&P.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Everyone, we're back, and we've got the Dow up 235, S&P's up 25.5. This is reflex action, short covering, a whole bunch of things going on. Move of almost 400 and some 450 points or something like that today. It's amazing. So look, I had a question about Baba, which is Alibaba. It's up 277 at 107.44. It really needs to break above 109.70s to show that it's got the kind of strength that it needs. It's holding the 200-period moving average at 104.47 support. It should be up 4 or 5 points right now. It's $107 stock. It's right in the area that you would expect it to be moving. Look, Amazon's up. Amazon's down 5. Can't get going. Something's going on here that is very different to normal. The RTH, that's the retail index, is acting very well, but the XRT is doing okay, but lagging badly compared to they're made up of different components. Now, just real quickly to go back to the silver, I said that I'd do something a little more thorough. Silver is acting in such a way. Look, this pattern is just a formidable pattern. When you learn to identify it, it just helps you so much. That's the H pattern. Let me put that CD in here. The H pattern that goes to a lowercase h that goes to a lowercase m. Try to get that in your memory. Just lock it in. And you will see that however excited you get about chart patterns, most of the time they're going to repeat over and over and over and over again. It's human nature. We either go straight up or straight down, or we go sideways. We're kind of complacent, right? So that's kind of what the market does. The market goes either in a straight line up, straight line down, or it has these patterns that start off nicely and then they kind of fail. You kind of get your hopes up and then it comes back down again. And that's the pattern that I call the H pattern. And what happens is at a certain point that H, the lowercase h, stops going down, or it could even be from a higher level. But it turns into a sideways pattern that constantly hurts you because you think it's going to break out. And as you think it's going to break out, you put your positions on instead of turns down. And then you think, oh, it's going to break down. And as soon as it gets to the bottom, instead of breaking down, it goes back up and it just stays in a rectangle formation that forms these lowercase h's. On the upside, we saw that in the IWM. The IWM, you remember IWM? It went up. It did exactly the same pattern, but upside down. There is the lowercase h. It looks like a soft Y backwards. There's the first cup. There's the second cup. Soft W, let's say. Didn't break out. Instead it broke down. And this time it went right through. Pop! It hits the 200-period moving average. It's trying to get back in again into that formation right there. So patterns repeat, and that's all I wanted to show you. Now, so silver... at SI in the 120-minute chart, at SI is, in fact, right there, trying its best to hold the 200-period moving average and break above it. Instead, it gets repelled. So 16.54 to 16.40 is going to be very strong resistance. Treat it like that. Okay, now let's get out of that. And I had a question. I was about to do crude oil, which is CL, because I think I was a day early on crude oil, just for a bounce. Look, what a nice move. Crude oil made a low today of 53.60. It's trading over 3 points higher. Nice candle. Just a bounce, but boy, a nice percentage gain. Yesterday, I thought this was the move. I would have lost it today because the intraday move was still more than I don't make stops too wide. But look at that, 120-minute chart. So crude oil, yep, finally you can get yourself a bounce. And it looks like this bounce could last a couple of days. So that says this market might have made most of its rally here. It has maybe another 100 points or so to the upside in the Dow, maybe another 10, 15 points on the upside in the S&P. Then I think we've got to be real careful again. We'll see on the speed of this. And one other thing is CLVS, and then we'll go to our callers. So we had Travis. Travis, lovely move. It's got, in fact, the pattern that I'm looking at for the last 6, 7, 8 bars in the daily has the move that says if you move up, and every day you make a slightly higher high, you could see a sudden quick move that gives back 4 or 5 of those bars. But if it closes back inside, especially if you can make a higher high after that, that's really positive action. I still suspect that you and I, what we were looking at, is going to work out. You are in the trade and you're looking for 62.21 to start leg D. In the weekly, I think you're going to get it. Let's go to Dan in Baskin Ridge. Dan, how are you?
Doing well, Basil.
Good.
I flipped from TVIX to XIV this morning.
Woohoo! Nice.
Yeah, as a matter of fact, I didn't expect that much of a pop in the XIV, but I wanted your thoughts on... And basically, there's a Fed coming. There's a Fed tomorrow. Options expiration Friday, right?
Yes.
And Christmas.
And then we've got very quiet. Normally, it's a very quiet week, Christmas week.
So I was just concerned.
So let's do this. I'm sorry. No, I just want to tell people we're looking at the VS, inverse, VIX, short term, and what this does is when the market goes up, the XIV means that the volatility index itself is going down, and this instrument, the XIV, goes higher. And you got it early this morning, almost at the lows, and it's up at 32.07 right now. We're at the 120-minute chart. Nice bar, but it really needs 33.36 or higher to say that it has a chance to hit the 200-period moving average of 35.53. Sorry, your question is?
Yeah, I was just concerned about holding the TVIX because of, things might just be dead for the next week and a half or so.
We have no idea yet how long the hiatus in crisis will be. I'm sure that whatever's happening in Russia tonight is going. Well, I'm not sure. I think it'll be perceived positively. And if that's the case, what it would say is that you've got at least into maybe options expiration for a counter. I'm calling it a counter trend bounce as I see it right now. So what I'm going to suggest to you is make it real easy. I think you're absolutely right. The TVIX has a chance to we're going to be, so let's go to let me just do this. I'll use the VIX index for the moment. So the VIX index is that it made a high today, and that's your root. The root is the VIX index. And that went to 25.20 this morning, and right now it's trading at 20.24. But it's still leg A. That means that tomorrow, almost certainly, unless there's a crisis, we will not get to 25.20. You'll make peak A for the very first time. Real good chance that we're making peak E in the VIX index, 120-minute chart. And there's a good chance that I had said to subscribers this morning that we would look for between the 18s and 16s as the area of most important support in the VIX index. However, there's something that's going on here, and we won't know until the day's end and into tomorrow at about 10:30, or maybe when my show starts tomorrow. We won't know what the market's perception of whatever Putin's doing is, whether it's going to be for real, to give a decent rally. I'm talking about a rally of weeks rather than days or hours, and that's when we're going to find out. So this is what I'm going to suggest to you. I think right at this particular moment, you've got the perfect vehicle, because if the market's going up, your XIV index, volatility index, should in fact rally. So that's number one. Number two, the way to do it now is, now your biggest fear is that you're holding it and you look just fantastic, and then for the seventh day in a row, whatever it is, the market, instead of being up 200 points tomorrow, is down 200 again. I don't quite see what the crisis would be to get it to 200. I could see it pulling back 50 to 60 points in the futures if it's perceived that Putin's not done the right thing. But the way I'm looking at it right now, we've reached conditions that are saying the market is on a shorter-term level, very, very oversold. It should release that. There should be a relief rally. That's what's happening right now. So I think you're in the perfect position, and I'm going to suggest, did you get in like at 30.90 or something?
No, I got it at 29.90.
You see, when you go in at so perfectly, the low today, folks, was 29.63, 17 cents off the bottom. I'm going to suggest that you don't, under any circumstances, take a loss.
Right.
And number two is you might even want to say, this is a fantastic move in one day. You might even want to take a little bit off to reward yourself, but keep the bulk at this particular point. And you might want to whittle away rather than let the market tell you. You want to tell it by saying, look, every time you move higher, I'm going to take a little bit more off, so that even if this is the low and it keeps going much higher, you'll have a smaller position, but you'll be in the right position. And I would raise my stop. That's one idea. The other idea is just to say to yourself, this should go to the 33 area, 33.90 maybe even. So I'm going to raise my stop on a portion. Probably that's the way I would do it right now. It's a 32.15. I say, you know what, 31, a point from my entry. that would at least allow me to make a nice little profit on a small position, and that's what will happen. If I'm stopped out, I'm going to be stopped out with a point gain on some part of my position. And then if it goes a point higher by this afternoon or tomorrow, you raise that and you let it take you out. So those are two ideas. One is you whittle away on the way up, because I think it's going to run out of steam, make a U formation, an arch formation, and come back down. Or you just stay in the position and say, I'll use a trading stop. Mr. Market, you tell me what to do, because these are my stops. That's the way I think that I would do it.
Do you think a 5% trailing stop would be okay on this?
So 5% would be 60 cents. Is that right?
No, like a, no, let me see, 32. It's $1.60.
Sorry, I had to multiply it. I forgot, $1.60. I would not take $1.60. No, I actually, you know what's funny? I tend to use, I know some people love percentages. I tend to use points. I don't know why. I just identify with points easier. So my number would be a trading, at this point I would have 31.90-ish to 31.80 as some kind of a stop on some position.
Okay.
And then if it breaks today's high of 32.61, folks, we're looking at the XIV. If it breaks 32.61, I'd immediately raise that to 32.20 or 32.30 on that same portion that you would have taken off before if you're not stopped out.
Very good.
So that's kind of the way I like to do it. I've got fixed numbers. I've got a fixed price point. There's some platforms that you can actually you could take your horizontal line, put it right there, and if it hits it, boom, you're out. And you can just pick it up and use it as a trading stop. You can actually raise it as the price is moving higher. So you can do that mentally, but there's some software systems, TradeStation does that you can do it fiddly. So I hope that helps you. You don't want to see a give back all the way to under 31 by the end of the day.
Right.
That's why I'm saying, you know, this is a gain that you didn't expect to be so quick and so good. Reward yourself a little bit by making sure you absolutely do not take a loss on the trade under any conditions. You must make some money, okay?
Thanks, Basil.
Hey, congratulations. Hey, nice move, clever move. So that's Dan in Baskin Ridge. Let's go to Jerry in Boston. Jerry, how are you?
Good, how are you?
I'm well, thank you.
Yeah, I was curious. You know, the last week of December has an extremely high percentage of the time that it goes up.
Yes.
And I was skeptical this year because all throughout late November and early December, everybody kept saying it goes up all of December. I'm thinking, well, if I heard that, I would buy, you know, in November or December, and that we may not have, you know, but now we've had this sharp decline, and I wonder if we're going to have a bias up in that last week of the year because of seasonal factors. Guys,
now, I remember you were discussing one of the big caps, the high-tech big cap stocks, and you said that you were a little nervous about it, and as a result, we were looking at giving you some kind of precautionary levels to be watching, and I think you already suggested that you were kind of a little worried about what's going on. Now, let me just answer your question in a twofold way. Number one is, I'd identified a long time ago that if you survived September, October on a very sharp down move and went to new recovery highs, especially if you went to new all-time highs, the tradition was to go all the way to possibly even the last day of December to make the yearly high. Except, I said, I'm a little cautious. I don't know how it could happen when I'm so close to peak D, E, F, and even a G in the Dow, in the Chapman methodology, that is coming in sooner. I don't know how we can last that long unless we went sideways. Well, we did go sideways, but we got all those letters, and if it wasn't for those letters, I probably would have tried to lean more towards the long side rather than leaning to the short side. So thank goodness my Chapman Wave methodology kept us on the right track, on the right side. Now comes the big issue. So hold on, because we've got a break coming up. Give me a chance. I wanted to show you a couple of charts and why I think this is a little bit more serious than normal, and I'll be right back with Jerry in Boston.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, let me just quickly do this so at least I get it out here. Yesterday, there was this tuba festival, I think it was in New York. It was started, a long time ago by Harvey Phillips. And he used to be over at the New England Conservatory when I was there, the New England Conservatory of Music, where I got my master's degree in clarinet performance and a minor in conducting and composition. So Harvey Phillips started. It's all around the country now. Tubas playing the Christmas festivities, and then you've got that's what I wanted to mention. I also wanted to mention the Age of the Dandy. Look it up. Very interesting. I have been talking about this for some time, that I think this is the period that we're going to go into. I'll get into that as we move on. I wrote it down. I would forget to read it. Oh, in Australia yesterday. Wow, it's such a beautiful little area that this whole thing occurred. It's one of the nicest parts of the city. Terrible. Well, let's go back to Jerry. So, Jerry, this is what I'm looking at. When you got companies like Staples, and I have to congratulate George from New York talking to us about this way back in the 12s and 13s. It's now at 17. Staples is... that's an activist working a company that has just been lagging and lagging. But it is a positive that, in fact, it's turning around. When you look at the old guard, like a Microsoft, turning around, but now it's having a sharp pullback. When you look at the restaurants like Panera and CMG, Chipotle, I think that those are topping out, that the restaurants are topping out here. So when I put the whole thing together, I'm going to suggest to you, looking out for December, because my New York Stock Exchange Chapman Wave chart has a potential peak F with an H pattern, that if the NYA does not go above 11,108 in December, certainly in January, but instead it gets halfway into this candle of October, is it? Yeah, of October, into the 10,270s. That's a real problem. And the Qs as well are in leg F/B. The IWM has made that peak F, but it's holding. It's not breaking down. I'm watching the levels very closely. I suspect this is, now that the IBB has given me a sell mode in the daily, I was waiting for that. I'm waiting for the weekly to see how it closes Friday. And the SMHs, I'm suggesting that this is not just a 1 or 2 week thing, or 4 week in some cases. I'm thinking this is something far more serious. We've got to take it very seriously. And unless the Dow is able to get to the 17,800s, let's say, within a week and a half, I think this is a problem. So I hope that helps you, Jerry.
All right. Thank you very much.
Thank you very much. Let's go to Alvin in Orlando just before we go to Chad with his options show. You want to look at?
General Electric?
General Electric. So one of my four Dow Horseman, GE, IBM, MMM, and UTX, it gave us the clue that the market was turning around with that peak E 2-bar reversal back on the 21st of November. I'm suggesting that it's filled the gap. It could have a little of a bounce to 25.53, somewhere around there. It's at 24.98. I think it's going lower, and 23.69 is going to be absolutely important. What your question was?
Just wondering where it was going short term.
Okay, short term, I can see there's a possibility of a bounce. Maybe the bounce is almost over. I don't know. But yes, it could get to the mid-25s. I'm not sure it can even get there. But if it gets there and then starts to turn down on the second move down, if it breaks 24.80, it's going to go to a lower low. I've got a target of 23.69. That's the way I'm looking at it right now. Unless it gives me a really great reversal pattern to say the market's turning around, that would say it's trading at 25.83 to 26.20 by Friday. But I don't think it can do that. Hope that helps you. Thanks so much for calling, Alvin.
Thank you very much.
Thank you. So, folks, stay tuned. You've got a great show coming up, Options Hour with Chad. You've got programming all the way through. My service is the opening call. This is just a perfect time to get it. I'll be back tomorrow. Have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.